Oil prices are at a level not seen in years, due in part to President Trump's decision to exit the Iran nuclear deal. While many of us will feel it at the gas pumps, it also means Oklahoma's energy companies are poised for growth in the near future.
It's been more than 3 years since oil prices have reached this level. West Texas Intermediate has topped $70 a barrel in recent days. OPEC undergoing production cuts, higher global demand drawing down on a years-old glut of oil, and Middle East instability are playing major roles in the upward swing oil prices are taking. Current financial reports from Oklahoma's major oil and gas producers indicate they're ready to increase drilling activity here at home, which means the help wanted sign is beginning to show up more often.
We're seeing growth in oil and gas employment again. Of course, as everyone knows who is around here in the last few years, we had a tremendous decline in oil and gas employment. We lost about a third of the jobs in that sector.
Between December 2014 through late summer 2016, Oklahoma lost nearly 22,000 jobs in oil and gas.
And those are jobs that pay well. So not only were there a lot of them that disappeared, they were high-paying jobs. The average right now for an oil and gas job is a little over $100,000 a year. And so that sends a lot of negative ripples through an economy.
Oklahoma companies are showing an interest in increasing production because of the higher market prices.
It'll give the E&P companies more incentive to go out and drill more wells, or if they have wells that have been drilled, to go complete those wells. So you're going to see a pickup in field activity. I'm pretty sure of that.
Oklahoma's energy companies are showing confidence in the marketplace to expand. The recent earnings report from Devon Energy indicates the Oklahoma City company is having success in today's market. Devon is raising its expected output for 2018 due to the increased prices and lower costs to produce oil and gas. Continental Resources also is feeling confident with this year's activity. It's addressing its debt load as well as becoming a more efficient exploration and production, or E&P, company. As other companies echo Devon and Continental's confidence, Oklahoma should expect activity to increase in the oil patch.
So I think what you're seeing is companies are being thoughtful about how they add back staff and personnel and rig lines. And in the meantime, frankly, in the last couple of years, they've gotten a lot more efficient.
Even as oil prices are recovering and drilling activity is on the rise in Oklahoma, it's technology that plays a key role within the industry.
Technological improvement has just been remarkable. And that's why we've seen this ramp up in oil production, I think, because we just get more oil out of each well.
Oil and gas companies have always been interested in efficiency to help increase their bottom line.
You know, the more they can improve their margins between the price and the cost, the better off they're going to be. What's happened historically is when those prices of oil and natural gas get so high, the companies get a little complacent. They think, well, we don't have to be as efficient. We don't have to look after things out in the field as much as we should. But when those prices drop from over $100 a barrel down to $30 a barrel, all of a sudden that changed the dynamics of how they look at this.
It's taken some time for Oklahoma producers to get to this point, as noted by Chesapeake Energy's latest financial report. According to Chesapeake CEO Doug Lawler, the company hasn't been in this good of financial shape in years. It seems Oklahoma's energy companies are looking to maintain the favorable marketplace as best they can.
We're going to be efficient, and we're going to be careful, and we're going to bring back on those rig lines and those completion lines, but we're going to be smart about it because we just came out of a pretty devastating downturn, and we don't want to enter that territory again real soon. So I think it's a longer-term horizon that our companies are looking at, and that's good for Oklahoma.
Wormington adds steady regulation and taxation levels will help stabilize the oil and gas sector even further, and that stabilization is important to companies going forward. While the industry in Oklahoma is growing, it hasn't fully recovered yet.
Since that low point, we've added about 8,800 jobs. So about 40% of the jobs we lost, we've added back.
There's an ancillary benefit to increased activity among Oklahoma's oil and gas industry. It's because Oklahoma's manufacturing has ties to the industry, and that sector is growing too.
There is a connection, a relationship between Oklahoma manufacturing and oil and gas, especially the durable goods manufacturing. We are seeing an increase in employment there as well. It's not as steep as what we're seeing in oil and gas, but the downturn wasn't as steep either.
The state of Oklahoma is experiencing decent job growth in a lot of sectors right now. In fact, the number of jobs in Oklahoma has passed the low point during the oil downturn.
We're actually higher now than we were back in 2014. When you look at across the board, not oil and gas. Oil and gas, we've only recovered about 40% of those jobs. But across the board, we have grown employment at a higher level than we were before the oil and gas downturn in 15 and 16.
However, energy companies are being a little more cautious in hiring.
If you're looking at the output versus employment, the companies are becoming more efficient. The technology has increased. Companies have been forced to change their, what we'd call in economics, their production function, how they produce oil.
Many economists believe the oil and gas industry is poised for growth over the next year to 18 months as global events affect stability and demand continues to grow. It could mean an energy windfall for Oklahoma's economy.